Well, core PCE for June rising 4.1% on the year versus the prior 4.6 reading. What is this? This is the Fed's preferred measure of inflation, of consumer inflation. It's a little cooler than expected, and data takes on extra importance in the weeks to come as the Fed's next steps are unclear. The next two CPI prints are already on investors' radar ahead of the September decision. So, I think the specific numbers become a little less important than the sort of trajectory of the numbers, and the fact that we continue to see moderation in these numbers, that they're all sort of going in that direction, is the thing that can allow the Fed to continue to either pause or be more benign in its rate increases. Of course, we've talked to a couple folks recently who have said we actually could see inflation go back up a little bit before the end of the year.
Which is particularly interesting given the fact that for consumers and where, if we break this out in a few different areas here, the areas where inflation continues to remain sticky in some of the housing costs and some of the shelter costs, and then additionally here in some of the other services related areas of the economy, for the individual cyclical purchases, consumers are all the more and continue to be very cognizant of that, but spending continues on things such as experience, on things such as travel. And so in all of those areas where the Fed is going to be monitoring where there is any type of abatement to that propensity to spend, I think when we look at the broader kind of inflationary and price reception that consumers continue to take on too, that just gives us a little bit more inclination as to where inflation actually is pulling back if they continue to push back on prices in some categories versus another. But service is going to be one of the stickier areas where that continues to linger right now.
Yeah, what's also interesting is this morning we also got personal spending and personal income.
Yeah.
And those numbers are worth mentioning as well, I should say, because we had personal income rising by less than estimated, but spending up 0.5%, which was more than estimated.
Yeah, personal income went up by about 0.3% at a monthly rate, and that's according to estimates that were released by the Bureau of Economic Analysis. Good read for this weekend if anybody wants to go and check that out, but we'll disseminate some of that data to you right now as we can here. But the current increase in current dollar personal income, primarily reflecting an increase in compensation, partially offset, according to the data, by a decrease in personal income receipts there. So without going further into or too much into that, one of the things that we can kind of continue to look at here is also something that the banks had talked about in household balance sheets and the personal savings rate data, personal saving as a percentage of disposable personal income. That was 4.3% for this most recent reading as well here. So that's just a little added context as to the broader inflationary picture, where household balances may stand as income kind of compared up against that spending propensity still.